Hello, everyone. We are live now, but we will wait another 1 to 2 minutes to give also the audience the chance to log in to join. So we'll start in around 1 to 2 minutes. See you in a bit. Okay, I would say we are good to go. Already a lot of people in the audience. So let's start. And welcome everyone to our today's webinar with the title Key Metrics CFOs Should Track for Web3 Business Performance. My name is Jacob Kobler. I'm VP at Request Finance and also for sure a proud member of the Web3 Finance Club. Web3 Finance Club is a thriving community of already over 1,100 crypto CF accountants, CPAs, and we have the goal to share insights, experiences, and drive the innovation in our evolving industry. The Web3 Finance Club still has a very low acceptance rate and is growing immensely. And with over 1,100 members, we are the leading Web3 community on a global scale. Today, we will discuss a very important topic, meaning the topic of how to steer a company through the complexities as O. And today we are joined by 5 amazing speakers. I think one of the most interesting set of speakers we had so far. And I will share a short introduction before we jump directly into the session. You see also on the slide already, we start with Arshita Khetan. She is the head of finance at a Web3 infrastructure firm dedicated to make Web3 applications as intuitive as Web2. And Arshita will share today her experience that comes from tax and regulatory roles. And she also worked for the big 4 companies. Next, we also have William Lindsay. William is the head of finance at Finoa, a leading digital assets custodian. And William brings in also extensive experience in the financial sector and supports Finoa to bridge the gap from crypto innovation and institutional needs. Next one, we have Oren Rosenfeld, the CEO of Fuse, which is a blockchain platform offering EVM compatibility and zero-proof solutions. And also Oren brings in a long experience as a CFO with over 13 years in different positions as a CFO in Web3 also and Web2 positions. We also have Bayar Ali here, the current CFO of CoinPayments. CoinPayments is a global leader in crypto payments processing and helps merchants to accept multiple cryptocurrencies with ease. Also, Bayar brings in 13 years of finance experience in different roles and 6 years of working for global consulting firms. And last but not least, we have JB, Jean-Baptiste Chenut here, the Chief Financial Officer at Request Finance. And Request Finance is a platform simplifying crypto operations and has already processed more than 800 million US dollar in transaction volume and serves over 2,200 enterprises. So very great to all welcome you today. But before we jump in, we have something special today. As the audience can always submit questions. So you can, during the call, during the webinar, after the webinar, you can submit the questions. And today we will select the best question and the winner will get 45 days of free Request Finance usage. As mentioned already, Request Finance streamlines crypto operations for invoice, payroll, expenses, and accounting. And the person who submits the best question today will get the pro version, the full version, 45 days completely for free. After the webinar, we will mention who the winner is. So let's start into our webinar. And I would suggest we start with the first question to Arshita. And I would be interested in how you are adapting traditional financial reporting practices to accommodate the unique aspects of Web3? And what are the key metrics you're focusing on?
Thank you, Jacob, for the introduction and for having all of us. It's always a pleasure to connect with this group. It's a very good question, Jacob, and very relevant because traditionally financial reporting has been around since I think the 17th century or before that. So the fundamentals remain the same. We still draw up balance sheets, P&L accounts, cash flows, etc. Right? But all of this now needs to be augmented to reflect for some of the Web3 specific activities. So you have tokenomics, you have on-chain transactions, you have DeFi transactions. So we stay, the fundamentals and the foundation is still around traditional financial reporting, but all of that is now adapted with a lot of these Web3 flavors. So a lot of new things that come in. I think the most interesting is on-chain revenue recognition, because there are so many different products. Biconomy is an infra company. So for each of our products and for each of our enterprise clients, there's a different way that our pricing is different. The way we are managing revenue with them is different. There's revenue sharing, etc. So that is a very interesting element that comes in. There's also things like a lot of DeFi elements that come in, which include things like staking and pools that we create, and how do you manage these? Because there is continuous unrealized profit and gains profit and losses you're making from these activities. So that's another very important element of Web3 financing. Apart from that, there's obviously a lot of other quantitative stuff like transaction volumes, maintaining how are we looking at our wallets, what kind of gas we are paying, what kind of chains are we working with. So all of this again adds another element to traditional financing, which did not exist outside of the Web3 world. And I think, so I come from a Web2 environment to Web3, right? So for me, I was always trying to look at crypto assets, classify them into one of the buckets that existed in Web2. But I soon realized that doesn't happen. This is a separate asset class in itself. You need to treat this specifically, look at it separately. So just treating the crypto assets very uniquely and differently than I would probably treat, say, shares, equity, or any other class is another very important element. So I think those are some things that go into making traditional financing and Web3 a little holistic.
Thanks a lot for that. Very interesting. And I would also like to add on that. So we are in a very evolving regulatory landscape. And Oren, I would be interested in this kind of new landscape. How do you ensure compliance while maintaining agility in your operations? And which the compliance metrics are most critical for you?
So I just want to open and say thank you for having me here. It's for the second time, and I have to say that I'm one of the fans of the Web3 Finance Club, and I advocate for everybody to talking with all my friends and encourage them to join this amazing club. And I learn a lot from being a member of the club. So yeah, regulation is an issue, as we all know, in the Web3 companies. Maybe now it will be changed for the better, at least from the side of the United States, when Trump will step into the office, and the regulation will be much easier and nicer and welcoming to Web3 companies. So as you mentioned, I'm the CFO of Fuse, and I'm the CFO of Inabit as well. And these two, although these two companies are Web3 companies, it's completely different compliance and regulation issues in these two companies. One of them is a SaaS company, and the other is the blockchain itself. So my first advice would be to try and to avoid regulation as much as possible, and to focus on technology if it's possible. But we all know that this is not always the issue. So we're just adopting a proactive approach, which means that we are monitoring our network, we're monitoring our product. There are tons of tools that can help us to do it, and trying tools, and then jumping on demos here and there to understand if there is anything new out there. And with compliance, you have to be proactive, especially these days with the EU talking about MiCA. We're engaging external legal experts to get all this advice and to understand, like when you hear more than one advice, you understand if the same advice goes more than one time, you understand that probably this is what you need to look at. Like talking about MiCA, nobody really how to make it, because nobody MiCA so far. On the technology side, we work with all these KYC platforms, and not only know your client and know your business, and we're working with know the transaction. We try to avoid any transaction that can be a blacklist, any transaction that to sanction, to be under the sanctions. And there are a lot of tools that can just alert and give you the red flags that if something is wrong on the platform or in the product. I think that something that we're looking a lot of, something is educational thing. Like we are talking with our salespersons and marketing persons in order to make sure that they know what they need to be compliant with. What is the regulation? The salesperson have the tendency to sell, and sometimes they need to understand who they can sell, what should be the funnel, what should be the process. And it's a lot about educational inside the companies to make sure that it's with compliance and not just running with technologies too fast to avoid any clash with the regulators. And so that's my point of view on regulation and compliance.
Thanks a lot for sharing this. And before that, she already mentioned the topic of the difficulties of correctly valuing revenue models and also bringing in the right buckets. I would like to touch on this topic. So Web3 introduces new revenue models. And Bayer, maybe continuing with you, I would be interested in how are you measuring revenue performance and what metrics are essential in the space for a CFO. What's your opinion on that?
Yeah, thanks, Jacob. I really resonate with Arshita and Oren. I think all of us originally come from Web 2, where, even the wealth of experience that we get there, we still need to adapt it to understand Web 3. So that's always a challenge. But I think at the same time, we shouldn't really separate Web 3 and Web 2 completely. I think a lot of concepts that we're working with on a day-to-day basis in the past are still applicable here in Web 3. We do not have to reinvent the wheel. So we have to use what we know, but we have to use our experience from the past to be able to drive forward and to improve Web3 businesses, generally speaking. So that's, I think, valid for finance, but for any professional services that come into Web3. And definitely in Web3, it's much needed to have like quality people like the ones on this panel, the people in the Web3 finance hub as well. But that being said, when it comes to revenue, CoinPayments being like a payment processor, I really used a lot of the experience that I gained in MasterCard before. I spent 6 years in MasterCard as finance business partner. And basically one of the roles there was to actually use this kind of metrics for various purposes, from planning, targets, and so on and so forth. So in a business like CoinPayments, if you look at it, revenue is basically a factor of price and volume. So identify your key revenue drivers and basically how you can model that together with pricing. And ultimately, it's about the level of granularity that you want to apply, because once you have that measure and you identify that, you can go into as much detail as you have the data for. So either go at product based, either go regional level, either go at customer level. So all this kind of granularity can always provide insights into the level of revenue performance. So for example, at CoinPayments, we do have different type of fees. We do generate revenues from different type of fees that we can look at more granular level. We can look at different dynamics. We can look at certain type of industries that our clients come from. We can compare it with what we know about our competition. This is, I think, the key point and the number one thing that we're actually looking at, because what we want to avoid is falling into various traps, identifying red flags soon, yet early, as soon as they happen. So we need to be monitoring our revenue drivers as soon as we can. We need to be able to identify trends in pricing. There's always very strong competition in this market. Margins are always eroding due to this competition, due to new technologies and new players on the market. So we need to be able to be agile. This is why data is important, and not necessarily even at monthly level. We have to look at weekly level. We have to look at daily level, because once you have volumes, you can actually segregate or aggregate that at different levels to do that. Like I said, we don't have to reinvent the wheel, but of course, I think what's important in Web3 is to identify for any business what are the key revenue drivers. Once you have that set in place, then it's easy to actually implement measures to be able to monitor that. That is the recommendation, basically, when it comes to revenue.
Amazing. And what would you suggest a CFO who now comes from the Web3 industry and starts out in the from the Web2 industry and starts out in Web3? What would you recommend in terms of defining the metrics?
In terms of revenue, don't abstractize, I would say. Don't necessarily deep dive into the technology first, head first, because that's really complicated stuff. You need to be able to abstractize the business and apply the knowledge and the experience that you have. Honestly, Web3 is not necessarily a different type of industry. It's existing industries with new technologies, after all. Apart from a few, like Arshita was mentioning on her side, for example, which involves completely new type of business. but most businesses still can be related to existing Web2 businesses. It's very rarely that actually new revenue models appear out of nowhere or are being generated. If you think about it, you can reduce it to the abstract that you know.
Cool. Thanks for sharing that. And not only I can ask questions today, also the audience. So like, a short message to the audience, drop please your questions on the right side. You have a comment field and also dedicated Q&A box. So you can submit your questions there because today we will have a winner who's it's the best question. So please feel free to add a question. But I want to now go on and William, I would ask you something. I would like to understand, sorry, I heard someone, I will mute. Yeah. I would like to understand how do you prioritize investment in emerging opportunities that always arise in the Web3 field? And what indicators would you signal that it's time to adjust the financial strategy in response to new market shifts, to new innovation? How are you prioritizing this in your company?
Sure. Yeah, very happy to go into that. Yeah, first of all, it's great to be part of the panel, and it's been very interesting to listen to all of the responses so far. I think coming from Finoa, which is really an institutionally focused platform within the crypto space, is that the prioritization for us when we're looking at emerging opportunities is really regulation and compliance first. And I think one of the interesting things about operating in a very innovative space like Web3 or crypto is that often at times we're seeing a lot of the innovation and the interesting projects are actually preceding the regulation and the compliance by 2-3 years. So there's this game of catch up going on whereby there's a lot of innovation taking place, some really interesting protocols coming out and new design mechanisms. And yet there's not really that infrastructure in place for companies which are very much regulatory compliant first, serving large institutions to necessarily delve into that area. So I think there's this element of really interesting stuff coming out and then it taking a little bit of time to mature. I think one area of that at the moment would be a lot of stuff around liquid restaking, for example. I think that's a really interesting area. There's been a ton of momentum. We've had EigenLayer, but it's not from a regulatory perspective. I think it's going to take them a little bit of a while to get used to what that actually is and how that works. So I think for us, that's obviously a very important thing. But I think from another perspective, I think we always try to be as agile as we can. I think for now, we pride ourselves on being able to be pretty nimble when it comes to being able to move into different opportunities. And so I think there are lots of things which very much track with what a Web2 company would do when they're identifying emergency opportunities, being very data driven in the analysis, looking at emerging trends. Has there been, is it demand driven? Is there a lot of adoption from customer bases already? So I think there are a lot of parallels that can be drawn from Web2, but you also get this super interesting dynamic going on where there's really a lot of stuff that's being brought out that there's just nothing to track onto the Web2 rails. And so I think that makes the work a little bit more interesting, but also you have to be a little bit more thoughtful as to how you go about that, especially if you're looking to target high-end institutions as your target.
Cool. Thanks for that. I agree with you. There's a lot of opportunity, but also a lot of unique challenges. And one of the main challenges for sure is also how to manage cash flow. There's a lot of volatility with multi-currency transactions. And continuing with you, JB, how do you ensure financial stability and which metrics are critical for you for tracking liquidity and cash flow performance?
Yes, thank you, Jacob, for the invitation. So regarding the volatility, thanks to stablecoin, we can avoid the volatility exposure in crypto environment right now. So it's not a big deal, but for example, previous business model at Request Finance, we accepted all tokens supported on the app. So we had a lot of tokens to manage and it was very tough and a lot of volatility. But now we accept in payment method, in terms of revenue, only USDT, USDC, and DAI. So we reduced the number of payment methods to avoid having too many tokens to manage. And we use USDC and USDT for the major part of our payments. We would like to use other stablecoins in euros, for example, but they are not democratized now. And for the liquidity, we manage many different blockchains. So yes, the liquidity can be distributed. So each month we realize a cash flow position to know the liquidity on each chain, and we monitor regularly the liquidity level on each chain. And thanks to crypto to fiat feature, I can pay with USDC and USDT on 4 different chains now. So we don't need to manage a lot of ramping, and it allows us to manage liquidity easier and save time.
Cool. Thanks, GB. So we already touched on the topic, which metrics to define to correctly assess for a new kind of revenue, but also in a growing field as in the Web3 space, we also see like companies growing very fast. And from a CFO perspective or head of finance perspective, Arshita, I would be interested in how you are measuring operational efficiency in a rapidly scaling company like Biconomy. So what are the KPIs you are optimizing for when scaling a successful Web3 business? I think you're muted. I will unmute you.
My bad.
Now,
I'm saying for come as a surprise, and it's the first thing on every CFO's mind is obviously cost optimization. Obviously, that is always on top of all our minds, especially with the crypto winter, which is hopefully going to settle now, and we hopefully see the markets ahead of us. But especially during such times, cost optimization becomes really, really important. And again, I use the word optimization and because we're still trying to expand. And so the idea is to get maximum throughput of all our resources of every penny that we're spending. And also while doing that, we are also extremely mindful of our expansion being sustainable and scalable. So it needs to be something that's going to benefit us in the long run. And it is something that we see regularly benefits from. So I think that is something that's very, very important. Apart from that, again, because we are an infra company, we do a lot of transactions. We help with transaction levels work for our applications, then things like cost per transaction, our operational downtime, transaction throughputs, system latencies, all of these become very important because these directly impact revenue. So all our product revenue is directly linked to all of these metrics. So this becomes very important. And this is a matrix that is not really finance controlled. It is a financial matrix, but it is something that the infra team and the engineers really need to focus on. So that I think is very important. Another thing that we keep looking at is obviously because we are in the tech industry is how do we quickly, is there other things we can automate? Can we leverage things like say AI or really amazing tools like request finance is something we use to simplify things. So a lot of times this then helps me with, again, allocating resources correctly, saving significant expenses because I'm just making better use of my time and money available to us. That's again very important. Another operational efficiency that comes in is also because we are remote, and I think most Web3 companies are remote. So again, that itself is a whole different factor because we're looking there are times when we're like, okay, maybe it makes sense to open an office. Maybe it makes sense to do more on-sites or, really small things like that because operations really is a sum of many small activities. So a lot of these things are what typically come into play at Biconomy at least.
Amazing. That were some really good learnings regarding operational efficiency metrics. But what we also need to discuss is how to manage risk. So my next question would be, operational risk is significant due to factors like technology adoption and market volatility. So what risk management metrics, Oren, risk management metrics do you track to mitigate those risks in the Web3 space?
Yeah. So what we're tracking is, I think that the first thing and the most significant one is the uptime of the network. There is when you hold funds and you hold the transaction and the value, and people can move value from one place to another. So to be 99% time of uptime, it's not enough. People really appreciate what is the uptime of a network. So this is something that we're tracking. We're tracking the latency of transactions in order to make sure that we are fulfilling the promise of crypto, that you can just make transactions and wires and payments immediately, and you don't need to wait like in fiat 2 or 3 days, and you don't want even to wait 5 minutes. When someone is transferring like today, like one Bitcoin from one wallet to another, you don't want to have this like waiting 10 minutes, praying that you will see it on the other side. So latency is an issue when talking about operational stuff. And from the finance point of view, there is, and JB just spoke about it, the volatility of prices of crypto. And the metrics that we are looking on is what is the percentage of treasury that we hold in crypto? What is the percentage that we hold in stable coins? I know stable coins are crypto as well, but they are less volatile. And we need to make sure that there is a policy that telling us how much we need to hold in which kind of currency, and to make sure that we are following board decisions and all these corporate governments from the old Web2 companies, because the risk is a risk. And that's what we are looking at. And something else that we need to drive our attention to is to hold tokens that have liquidity, especially when you're a CFO, when you need to have financial statements and you need to know if something is cash and cash equivalents. And if you hold something, and if you hold a token and it's not, you're not will be able to sell it, or not will be able to sell it in the current price. So there is a question: is that a cash and cash equivalent? Is that even a current asset or a long-term asset? Another thing is to use, in order to avoid the operational risks, which is to send the money to the wrong place, to avoid people breaching into our wallets. So we're just using technology, and of course it's easy in Inabit because we're using the Inabit technology in order to avoid these cases. And in Fuse, we're using few technologies and wallets and platforms to make sure that we hold our funds in safe places. And again, I'm a big fan of self-custody solutions. I think that when you are in the Web3, when people using crypto, the whole idea, I'm sorry, from all the custodians out there, is to hold your funds and to know how to make it in a proper way and in a safe way. And so that's from the very operational metric, but something that I think that CFOs should try to from metrics. So we were talking about the operational stuff, like tech stuff, uptime and stuff like that. And from the finance point of view, it's all about managing the treasury in a proper way and the corporate governance, and making sure that we're not betting on the very volatile tokens when using other people's money. The investors' money shouldn't be like, they should understand what we're doing with their money and how we make sure that this is not too volatile. And if it is, it should be according to their decision, according to the board decision, according to a certain policy that was approved by the board. And I think that I really like what Bayar said about taking the know-how from Web2 into the Web3, because risk is risk. The technology is new, so it just added more risks that we didn't have in the past, like wallets and losing the passwords or breaking your cell phone, which is something that human beings have the tendency to do, both breaking their cell phones and forget passwords. So we need to understand how to avoid it. So this is very operational stuff. This is not like a proper metric, but this is something that we really have our attention to know that in the doomsday, we have a disaster recovery policy, and to make sure that we are working on the safe side of Web3. So that's what we are doing in both companies. That's from my side.
Cool. Thanks for that. That was really great insight. And also the audience comments here and says, great analysis on risk. So thanks for sharing this. And now we learned that uptime stability is key. And I would like to touch on that and continue with this topic with you, Bayar. And I would like to ask you, which metrics do you prioritize when evaluating the performance and the sustainability of your platform's ecosystem? as Oren just said, uptime stability is important, but what would be the particular terms of user activity, network expansion, partner collaboration that you track? So what's your take on that?
I think this is the beauty of Web3. I think very easy in Web3 because it's if you look at this, it's such a small group of people compared to Web2 or outside of Web3. It's very easy to find partners that share common goals and want to work together just to develop the whole ecosystem and to grow together to develop Web3 in general. I think that's part of the beauty of it. And at the same time, finding the right partners is also a more efficient way to grow, because otherwise you need to invest, you need to develop certain products and features. And sometimes it's easier to work with partners. It's easier to integrate with third-party providers that can actually help you grow your ecosystem, and you can help them as well get you traction. I really believe without this collaboration kind of environment between us, it would be much more difficult to actually push Web3 and to drive like sustainable growth in most of the businesses. And I think there is not anybody here who doesn't collaborate with a large number of partners compared to traditional businesses. Even if I think, for example, Request Finance, and I was mentioning this before we went live with Peso, that's an outside partner, then it becomes an internal partner. So it's all these kind of synergies that we need to take advantage of and build on and find the right partners. But for us, it's still good. It's still effective to be able to define clear SLAs when working with partners in our ecosystem, whether it's like Oren was saying, uptime or different levels of service. It's important to have this and to be able to monitor it, because if you have that SLA and you don't monitor it, you have it for nothing. It's not useful. So you need to be able to have the tools to be able to track, and you need clear communication channels to be able to correct and to intervene when it's needed really fast. And this is very important for us at CoinPayments, because even though we keep our clients in our ecosystem, on our platform, in our front end, it is our reputation who is at stake when the service of a third party doesn't work. We are very strict on that. We are very serious when it comes to the performance of our partners. As the ecosystem grows, the number of partners grows, it's becoming more complex. And I do feel there is a lack of tools here on the market that would be able to actually assist with integrating or consolidating this whole partner network. So if you guys know anybody that provides this kind of service, or might be a good idea for a new business, who knows?
I agree with you,
Jacob. Yeah.
Thanks, Bayar, for mentioning the importance of collaboration and partnerships in the Web3 space. That's a really good point. And I would like also to continue exploring this topic a bit more and ask William, because I'm very impressed by the partnerships that Finoa is always publishing. So I'm really impressed by that. Therefore, I would be interested in how partnership and ecosystem collaborations in Web3 are measured within Finoa. So how do you measure the impact of those collaboration, partnership, relationships on your business performance?
Yeah, it's a really good question. So at Finoa, we have a number of different partnerships in a variety of different business lines. So an example of somewhere that we've had partnerships for a really long time would be in the staking business. So we run our own validators via our own dedicated system, our own dedicated subsidiary, Finoa Consensus Services, but we also have some really strong partnerships across the ecosystem with the likes of Chorus One, Figment, Block Demon. And actually that's been a really fruitful partnership over the years, because we've brought them business, they brought us business, and we've really grown together. And in terms of how we then measure that and how that's impacting our business performance, it really just comes down to how is that helping us in terms of revenue drivers and customer retention, of course, but then there are also non-financial metrics that are super important. Brand awareness, being able to build relationships, not only with customers, but with other partners within the ecosystem. And I think the Web3 ethos is very much one that I think is partnership driven and is really about testament about networks. I think if you look at a lot of the Web2 companies, they're really getting a lot of their moats by pulling up the drawbridge and really trying to own every part of the stack. Whereas I think with Web3 companies, we actually see that the value of partnerships can be even higher through a network than it would be of just trying to do everything in-house. And so I think that's a really valuable part of the way that we approach our own business strategy and partnership strategy, and definitely something that I think we'll continue to see bear out as we continue to grow out our own business. So yeah, definitely a super important part of our overall business.
And do you have a clear set of metrics that you define together with your partner, or is it like always depending on the partner, something that you come up with?
Yeah, it's very much partner specific. So I think, for example, we have our staking partners, we have brokerage partners, we have partners across a variety of reporting realms as well. So it's very much partner specific. But I think, as I said, there are financial KPIs that we can look at in terms of the revenues being generated, but then also non-financial KPIs in terms of how's that helping us with our brand or with just generally in customer and commercial conversations.
Cool. Thanks a lot for that. Today in the webinar, we touched on metrics on operations. We touched risk metrics, now also growth and partnerships. But what's also important in a competitive market like the Web3 market is for sure customer trust and customer satisfaction. So I would like to ask you now, JB, how do you measure customer satisfaction and retention in the context of like crypto invoicing, the accounting platform that was recently added, and which metrics help you to improve customer experience?
Yes. So as we are a B2B SaaS, and in B2B SaaS, we analyze three metrics mainly to measure the customer satisfaction and retention. So the first one, and one of the most important, is the churn rate. So we calculate the monthly churn rate, and we create cohorts of new clients each month, and we track the retention rate per cohort. And as our platform grows, it helps us to identify patterns in churn rate. We also calculate the LTV, the lifetime value, that is very important. And the LTV is directly related to the churn rate. And the third one is the monthly recurring revenue per client, the upsell and cross-sell, for example. It gives us indicators as well in customer satisfaction and retention. We also analyze the monthly payment volume and the number of crypto payments per feature. So it helps us to know which feature we need to improve or which feature we need to focus on. But yes, the churn rate is crucial for B2B SaaS. A good rate allows us to get a better LTV, and we have a customer support close to our clients to get feedback. And as we are customer oriented, we try to build our product with our clients. And last but not least, for the trust, we also offer insurance for on-chain transaction and request finance, thanks to a partner that is called Open Cover. And I think it's a real added value for the trust of our customer.
Mm-hmm. And you also have a background in Web3 and Web2. So would you say there's like a difference in kind of those metrics comparing now Web3 position you hold compared to your former position in Web2?
Not really, because we are a B2B SaaS and you have the same KPIs in B2B SaaS. So there is no big difference, I think, between Web2 and Web3. But maybe to build the products, it's even more important to be close to Web3 clients, because change and evolve a lot and very fast.
Amazing. Thanks for sharing this. So today we touched now on a lot of different metrics, topics, but one thing we also should cover is the field of governance and ethics. So my last question before we jump into the Q&A session, because I see our audience already dropped a lot of questions, very interesting questions. But before we go into that, I would finish with the last question to you, Arshita, on the topic of governance and ethics. And I would like to understand, how do you incorporate governance metrics into your financial performance assessment? What role does ethics consideration play in decision making? I think I can't hear you. Are you muted?
Can you hear me now?
Perfect. Now it works.
Perfect.
So I'm saying for anybody in finance and as a role itself, governance and ethics become extremely crucial. It is what people see of the company, right? It's the first thing about a company when you look at numbers. And of course, in Web3, we look at governance very closely, more than we would typically in a Web2 world. So yes, it is of course very important for us. And having said that, we have our own token also. So there is an added element of governance that comes just by even having a token of ours. So there's a governance angle with respect to our token, and of course with regards to all the operations and development work that happens. I think the biggest matrix with governance and ethics is transparency, is how we manage to and with obviously on-chain activities, there is a lot of transparency, but there are also ways to do it in a manner that is not very transparent and to make it seem like what it isn't. So I think we keep our wallets, our transactions extremely transparent. Everything is recorded. Everything is fully disclosed in our financial statements, the good and bad. We've all had instances where we've seen losses. There are hacks. There's so many of these things that keep happening. It's unfortunate, but again, extremely transparent about it. It's all made public as soon as any of this happens. There are a lot of initiatives that we do. There are investments, there are grants. So again, grants, these could be one-way transactions or two-way transactions. A lot of transparency. Documentation, again, has become very important. I think a few years ago, the amount of work that the legal team was doing was much, much lower than today. The importance of documenting everything, having the right set of flow of a transaction in place, and all of that being recorded and disclosed, I think is very important. Coming to the token bit, there's obviously the whole community involved. So everything that is spent from the token bit, from what was allocated to the community, is 100% disclosed. There is a governance model put in place. There is voting that happens there, and all of that has been discussed. Communication is managed very effectively. There is also stuff like staking that we do. There are rewards. There's APIs that come in. We used to have a bridge in the past, so obviously there were some returns there. So again, all of these are very easy to go wrong with. So I think from day one, the one practice that I have really imbibed is ensuring everything is recorded 100% and is fully disclosed, the good and bad. And I think once that is done, building on from there becomes significantly easier.
Cool. That were amazing insights today. I think we learned a lot from this great set of speakers on the topics of risk, ops, growth, partnership, and compliance metrics. And now we move to the next part of our webinar, and I will go to the next slide, because we now have also dedicated around 10 minutes now for doing a Q&A session with the questions from our audience. And now if I look at the Q&A section, I see we received a lot of questions already. And I will now take the question with the most upvotes from Camilo up, and will now place it here on the screen. And the question from Camilo is: what are key collaboration discussion points with exchanges or market makers when issuing your own token in order to mitigate risk, assuring from valuation volatility to ensure market liquidity? Quite a long question. Anyone from the speakers who feels like ready to answer that and share learnings about the question? Maybe I read it out again. It's a longer one. What are key collaboration discussion points with exchanges or market makers when issuing your own token in order to mitigate risk arising from valuation volatility to ensure market liquidity?
I think if I can I only have a few comments, because I have some experience with market makers and exchanges, but I think when it comes to market makers, it's always tricky because the level of transparency is really low when it comes to this. In the relationship with a market maker, from the starting point, you need to make sure that you have all the information exactly about daily reports, what kind of trades they're doing, what kind of price they're pushing, and to give out clear orders about your strategy. So you really need to be aligned with the market makers in terms of your strategy, especially when it comes to issuing. That is the most volatile part usually, or when there's a new listing on an exchange, or when you have significant events. That should be tied also with your vesting schedules and the whole tokenomics. Communicate well, explain to them your whole strategy when it comes to tokenomics, I would say, and make sure you understand what they're doing. Because I think in today's, let's say, level of development of Web3, when it comes to market makers, I still think there's a big room for improvement in how they work with clients, in their transparency and in their reporting side. Yeah. Another thing is that they will always try to push all sorts of upfront fees and fees. I think the business model of a market maker is entirely fine, I would say, for margins, for markups, or from their trading strategies. I think if they try to push more fees on us as projects with tokens, then that's only going to lead to let's say, worse market for us, I would say. Those are my comments.
Good question and good answer. Thanks for that, Bayar. There's another very interesting question, which I will put up now.
It's market makers. I think that when you're going to hire a market maker, actually, I'm familiar with the options. One is to pay the fees, as Bayar just mentioned, and the other is to do the loan option. I think that both of them can work. It depends on what you need as a token issuer. You need to be aware that you want to be aligned with your market maker. You don't want your market maker to take the whole advantage of option loan. And sometimes you will prefer to pay fees to the market maker. So it really depends on the issuer, but these are like the two options of how to hire market makers. I totally agree with Bayar that you need to understand what do you want him, what do you want the market maker to achieve, what are the KPIs, and just make sure that you follow the KPIs and the metrics that you agreed with the market maker on day one. And that's for me. So thank you, Bayar. I totally agree with that.
Amazing.
We are currently, in fact, I'm currently speaking to a few market makers renewing, and it's the same questions. It's just about agreeing to what we want and ensuring that they have a thorough understanding of what kind of strategies we are following. Sometimes we obviously get great advice on another strategy that's worth considering. But I feel like, and we've worked with multiple market makers in the past, but each of this is extremely customizable. So there are one or two fixed rates of doing it, but the pricing, the volume that goes in, the timing of it, the longevity of it, all of that is extremely customizable and is extremely dependent on what you're looking for. So one, I think the Bayar also said agreeing upfront. And I think the other thing that we do very often is a regular follow-up. So we do, if the markets are seeming volatile, and it could be as frequent as weekly, otherwise, if not anything else, at least fortnightly follow-ups to ensure that we are still focusing on the strategy we've decided and we've not sidelined from that. And if there is a need to sideline, yeah.
Amazing. Thanks for sharing this. There's a very interesting question from Tom also. And the question is, what Web3 tools do you use to monitor your company and project's performance? Who wants to take that question? I can also select someone. Maybe William. What Web3 tools do you use to monitor your project or company performance?
Yeah, so we don't have our own token. We're not a Web3 sort of on-chain company, although a lot of our revenues are coming from on-chain. So I'd say, what Arshita said towards the beginning of the discussion around revenue recognition and the tools that we need for that. I think given that we've been growing relatively quickly over the last few years, we've been getting involved in more and more projects in more and more blockchains, and actually being able to assimilate, get all of that information, consolidate it all together, and then make sure that it's accounted for correctly and compliant with tax and regulation has actually probably been the most challenging aspect from our perspective, especially when we're working in a regulated environment. So what we've had to make sure is that we're getting that data that's coming from a really high quality source, and that it's not going to come in with errors, because the more errors that it contains, the more the manual work that we have to do as a team and going through and trying to correct for it. The platform that we're using at the moment for all of our on-chain data is Treasury Finance, and we have a good working relationship with them in order to be able to get all of our on-chain data for accounting purposes, reconcile all of that, and then be able to then upload that to our standard accounting ERP and have our tax advisor then work with us on that. That's from an accounting perspective, that's been a really helpful tool. And I think, to be honest, as we get more involved with more and more blockchains, there's more and more tokens, you've got more and more complex mechanics going on with staking, restaking, liquids, and the challenges just keep on growing. So I think it's really important that as a Web3 finance team, there's a really good handle on accounting data there, and making sure that once you've got a good platform, you can start to do some of the more interesting stuff around KPI analysis. But I think getting the basics really right is super important.
Thanks for that. We have time for one last question. And the last question comes from Sunny. And the question is, the ratios between crypto and fiat on the balance sheet is important. I think that we should monitor especially assets versus liability, how to control it efficiently. So the ratio between crypto and fiat on the balance sheet, how to control it efficiently. Who wants to take that question?
I will take it. I think, this is Oren. I just don't see my camera, so I don't know if you see me even, because I was restarting my computer during the session. So as I mentioned, I think that a CFO or a finance leader should decide with the board what should be the level of crypto versus fiat on the balance sheet, and just to make sure that we are monitoring it on a regular basis, and to understand when we want to sell and what is our limit, what is the red lines if Bitcoin and Ethereum are running in a bull market, or if the winter is coming, to understand what is the level that we will sell or buy crypto and fiat, or to swap it to stable coins. So it's something that we need, and trust finance. It's a good tool to understand what are the balances every morning or every second. It's not support everything. There are many tools out there that can bring the data for treasury management, and just a company should have a policy to understand what is the level. And then you have a policy of how you want to sell. If you want to sell everything on the same day that you cross the red line, or you want to sell chunks of all your tokens, or is there any token that you want to sell first? I think that all these decisions should be made. A company should make it before it happens, and then just to follow the policy, because it's really difficult to make the policy when, for example, there is a bull run and Bitcoin is running to $100,000, and then to say, no, I don't want to sell it because I'm a believer. We need to sit way before that and to say, okay, if Bitcoin hits the 95, we're going to sell this amount of Bitcoin. The way I treat it, and that's my answer.
Perfect. Thanks, Oren, for sharing this. And that also brings us to the end of this session. I say big thanks to all our speakers, but then also for sure, thanks to the audience and the great questions. As mentioned, that best question will be selected after this webinar and the winner will be informed. Also, you will receive, so all of the audience members will receive now an exclusive NFT via email. So a Web3 Finance Club NFT. And we say thank you. Thanks again to speakers and the audience. Stay connected with the Web3 Finance Club, and see you soon in the next webinar or in the next offline event. Thanks again, and see you soon.
Thank you. Bye.
Thank you.
Bye.
Bye.